Another wild week. It's become commonplace these days. If you look at what happens in the stock market, the economy, geopolitical tensions, it is truly off the charts. The first thing I want to cover is the Fed playing catch up. If we look at their activities and what they plan on doing, things are getting very serious. So let's keep an eye on that. I'll bring you all the details. The second thing I want to look at is the one small issue, but we're going to open that Pandora's box and get into all of that and more. Let's begin. I think this is so key. Look, the Fed's Bullard says the central bank's credibility is on the line. And if you remember, I talked about this in a video just recently, saying that they have to do at least something right now because of their credibility. This is really, really big. Because if you looked at what had happened just a few months ago, they were saying, no way, no how, no rate increases, none of this. And then they started saying, well, yes, it's coming, but it won't be till later. And then we had certain individuals who were suggesting that this is not going to happen. The Fed is bluffing. And look at where we are right now. The Fed has to play catch up. Catch up. They need to front load their hikes, essentially saying, look, we need to do this really fast, and then we could go slow later on. The St. Louis Fed President, James Bullard, told CNBC that he thinks the Fed needs to push up interest rates quickly. Our credibility is on the line here. And what is he talking about credibility? Well, essentially, initially they said, inflation is not going to be a problem in all this, and clearly they missed that. I think I have an article about that in a second here. Essentially saying, yeah, we missed that. So if they don't get inflation in check, well, then it's going to look really bad on them. And while you and I know what's going on with the Fed, the investors, the big money, the pension funds, the investment companies, they are always actively managing and paying attention to what happens with the Federal Reserve and their forward guidance. So if suddenly that's changing, well then, there is a big problem. Okay, so let's take a look further down if there's anything here. I do think that we need to front load more of our planned removal of accommodation than we would have previously. We've been surprised to the upside on inflation. This is a lot of inflation. Our credibility is on the line, and we do have to react to the data. However, I do think that we can do it in a way that's organized and not disruptive to the markets. We'll see. Okay. The last time that they did this, and I believe, despite what has been said right now, that back in 2018, and actually back through 2017, they made it known what they wanted to do, reducing their money printing and, sort of getting off that balance sheet, normalization as they called it. They made it known. And yet the market didn't like that. Because why? I've said it 1,000 times. If the Federal Reserve prints money, they could push the markets up. If they reduce the amount of money that's being printed, the markets can fall. There's a correlation there. You've seen it. And here's basically the same thing, just showing you that if you want to check out the actual interview of him. And then you have others. Mary Daly, president of the Fed in San Francisco, said that the Fed needed to get moving, but that its approach ought to be measured. Quote, I see that it is obvious that we need to pull some of the accommodation out of the economy, but history tells us the Fed policy that abrupt and aggressive action can actually have a destabilizing effect on the very growth and price stability we are trying to achieve. So basically saying, yeah, we want to act, but we don't want to be too, hasty with it. And we have to see what happens. Of course, all of this means nothing until the actions are taken, but understand that there's always going to be two sides to it. I found this to be interesting. Inflation expectations, which have been just going higher and higher and higher, have actually dipped downward. This information comes from the New York Fed. You can see here what's going on. Too early to tell, but certainly that's important, okay? Because all of this, being the consumer being the number one, the big boy, we need to follow along with what happens. The Fed and the market has never had to pivot so quickly. Market implied number of 25 basis point rate hike over the next 12 months. We'll see. We'll see what happens. But when you're looking at the CPI above 7%, even though it's a manipulated stat, that is extremely high. And how's the market going to react to that? Not very good. Then we have another central bank going in the complete opposite direction. I've talked about this before. China market watchers see the PBOC, the People's Bank of China, cutting rates in the coming months. They are injecting liquidity. They are reducing their reserve requirements for the banks, basically how much cash they have to keep on hand. This is unbelievable, truly unbelievable when you think about it, looking at all the other central banks. At least the ECB is saying, we're thinking about going the other direction. PBOC in China, they're saying, no, we are cutting. We're making it easier. All right, let's take a look at this. I think it's important to see the actions that these central banks have taken and what it means to you, the individual. Because look, 7% inflation, 15% inflation, S&P at this number, whatever, what it means to you. The top 1% own 32.1% of the total wealth. The bottom 50 own 2.5%. It's unbelievable. It's unbelievable. Every time I look at that, certainly the top 1%, I love it when they break it down even further to see the top like 0.1 and the 0.001 and all that, because the divide has actually grown. Certainly the top 1% does have more wealth than they did before, but the top 1% actually includes the top 0.001% when you think of it like that. And those are the people that have really gained. Okay, so you can look at that, the bottom 50%. They're showing this tick upward, and I wonder if it has something to do with all this stimulus, but we'll see. Now, this is important, okay? Wolf Street had this. On-time rent payments sag amid massive spike in rents. Shouldn't be a surprise to anybody. Rents have gone up considerably. Look at places like, in Florida, where you see rents going up 30% year over year. Other places are similar as well. Look, in 34 cities, asking rent spiked by 15% to 28% year over year. At the same time, you don't have all those protections in place and so on from, all of those things that were put in, even the stimulus measures that were put in from 2020 into 2021. Percentage of on-time rent payments, you could see that. What has happened? Declining, right? Obviously not a good thing. Okay, and it just puts additional pressure on the entire financial system. If the money's not coming in, it's not being paid, somebody is getting the short end of the stick. And just looking at retail gasoline prices, seasonality is one of the highest we have seen in many, many years right now. And with the tensions going on with Russia and so on, that could head higher. We'll see what happens. I'm hoping that kind of just blows over and that kind of moves off, because it's not healthy, of course, to see that kind of tension. It's never a good thing for anybody except those who had been buying into oil, that's for sure. The uneven fallout of the inflation surge. Share of U.S. adults saying the recent price increases have caused financial hardship for them by household income. And, severe hardship, moderate hardship, no hardship, breaking it down. All you need to know is that those at the bottom end of the scale are hit the hardest. This is not news to anybody. I get it. But it just makes me think of all the actions that these central banks take. They tell you they're there for price stability. They tell you they're there for full employment. They sold you a lie And yet today, people still have faith in their activities. And in fact, because the belief is there that they pump up markets, that they like them. Well, here we have the antithesis of gold, I should say, of the Federal Reserve, and that is gold. And I say that on purpose. 1878 for the price of gold. You haven't seen it in a long time. Geopolitical tensions and so much else going on. Here we see the price of gold going up. Even silver has gone up, but obviously the most manipulated assets we've ever seen. Going back, 20 years, it has gained 529% when you look at gold's performance. So it's not too bad, not too shabby. Nobody's complaining about that over a 20-year period. But we have to understand here, when we look at, what's going on with assets, where do we put our money today? Well, I have talked over and over again about the need for diversification, and not just in one sense. We got to make sense of this on a real wide scale. We are investing over a long period of time. Hopefully, that's the horizon. And we are also investing in the different asset classes. I've been accused of basically everything. I've been called every name in the book. And which the segue into, I talked about the 4 asset classes in my book. I talked about the benefits of the 4 asset classes in my first book. And yet, the average person simply doesn't recognize that there are 4 asset classes. They'll say, okay, well, you got stocks, you got bonds. What are the other ones? Are you talking about like real estate or something? And, it is unwise to be uneducated at this time. I'll just say that. Get wise to this. If you've got $100 to your investment portfolio, it's going to be a different situation if you've got $1 million. There's no doubt. But we can take action today and do things that require little to no money that diversifies what we do. Some people right now are getting firewood. Some people are using their skills. They're a handyman. They can bake. Some people are investing into what they believe are safe havens. But there are some people, I would say the majority of people, that kind of just lay back and relax. How does that sound? Is that a good idea? Just take a nap? No, of course not. Now is the time to take action. If you appreciate this information, hit that thumbs up button. And if you haven't seen this video yet, you definitely want to check it out. Click it, and I'll see you there.